Background. Ladies and gentlemen, live here with a very special guest. We have Hermes Lux. I view Hermes as a must follow on Twitter, a must follow. Definitely deserves way more followers. Hermes, to me, is one of the quintessential Twitter accounts when it comes to MicroStrategy, covered call strategy, long-term MicroStrategy, investing strategy. So Hermes, thank you for coming to the show.
No, thanks for having me. I appreciate this. It's only my second or third time doing something like this, and it's all pretty new to me. So I'm just glad to help out the community however I can.
Yeah, you definitely should do more. Without question, you should do more. I think a lot of people are interested in the way you think through some of this stuff, myself included, which is why I was pumped to get you on here. So one thing that you went quasi-viral for on Twitter is you're essentially, from my perspective, you're MicroStrategying your own life, meaning you're using 0% interest credit cards. You're taking other people's money and you're using that to generate a yield of Bitcoin and MicroStrategy, which I think is super cool. And you did a deep dive tweet thread and a deep dive podcast appearance talking all about that. I don't want to talk about that today because you already kind of put all that stuff on wax. I want to talk all about MicroStrategy options and how you view MicroStrategy as an asset. So even if people are not experienced options traders, simple definition of selling a covered call option is you hold 100 shares of a given stock like MicroStrategy and you sell a call option to the market, meaning someone else, is in theory buying a call option. They're making a bet that it's going to go up. You are technically holding a bearish position, but obviously you're not a MicroStrategy bear, but it's technically a bearish position. It earns the person selling it a premium. If the stock hits the strike price that the call option was sold at, then the shares get called away, meaning the person that sold the call option sells the shares at that strike price. If it does not hit that strike price on its expiration date, it expires worthless. And so the person that sold it just collected the premium. I wanted to just give that brief definition. Did I miss anything there, Hermes?
The only thing that really I would clarify is whether something is bearish or bullish is a matter of how you have it set up. When I think of the word bearish, by definition, I'm thinking of I'm betting that the equity or the stock or the underlying is not going to go up. It's probably going to go down. But when I'm selling these covered calls at the 10 delta, that's not a bearish That's not a bearish position per se. I mean, and technically, in one sense, it's bearish because you're short a call, but you're giving yourself a lot of wiggle room, almost a complete upside potential. The complete realistic upside potential. So I would just make that one little nuanced difference there.
Absolutely. Absolutely. And so, you mentioned the 10 delta. So you love, or you tweet a lot about selling the 10 delta covered call 30 to 45 days out. So right today it's April 15th. So I think the 10 delta or excuse me, the expiration date you'd probably be looking at would be like May 9th or May 16th, if I'm not mistaken, right? Those are the dates.
16th and the 23rd. Yeah.
16th and the 23rd, and the 10 delta. So, when we talk about the Greeks, I think some people get intimidated, but they're actually simpler. So, I mean, the definition here, delta measures how much an option's price is expected to change for every dollar change in the underlying asset's price. So I guess from your perspective, what's the simplest way? And we'll move on from the simple stuff in just a second, but I want to give people a little bit of a baseline. What's the simplest way to define the 10 delta when you're trading options?
So you said it very accurately. That is the definition. A lot of people mistaken this for thinking 10 delta means it has a 10% chance probability of being hit. That's not accurate.
Yeah.
Because that percentage really depends on the expiration date. That's going to change a lot. And as you get closer, that percentage of in the money at the 10 delta is going to fluctuate. Simply, it's I can't say it more simply than the definition you stated. So it's as the stock, let's say MSTR. If MSTR goes up $1, then the option price for whatever option you're looking at, the 10 delta will move up approximately 10 cents in value.
Yep. Okay, makes sense. So the scenario that is easy to understand is I sell a 10 Delta covered call for May 23rd today. I collect X $100 of premium, on my 100 shares. Strike price is 480. Let's say I think MicroStrategy closed today. I don't know, something like 305, 310, something like that, right? Let's say the strike price is 480. If we get to that date, to May 23rd, and the price of one share of MicroStrategy is 460, then the call option that I sold expires worthless. I keep the premium that I collected when I sold the option. I'm home scot-free on that particular options trade. What I'd like to talk about is different scenarios. For example, when you might roll an option, what might prompt you to roll on one of your options that you have open. And also, I want to dig into it because I see you tweeting about it seems like you're comfortable with the scenario where the shares get called away and you have a plan for that scenario. I saw you tweet about, hey, if the shares get called away, well, you can just end up buying back what you can, selling the 20 to 30 Delta, which would be a more aggressive covered call that you're selling, and taking that premium and buying more shares. And because when Bitcoin and MicroStrategy explode up, it's not this sustained explosion. It's like it's parabolic, right? If you look at the chart for October and November last year, MicroStrategy explodes to 540 and then it pulls down. So I think I understand the way that you're thinking about that. But if you could walk me through a little bit of how you think when you sell these covered calls in a time when the stock is going up at a fast pace, and when to take particular actions like rolling, like closing your position, or like how to be comfortable getting the shares called away. Because from my personal experience, I'm not like, I don't think I'm interested in the shares being called away. Like I want to hold my MicroStrategy shares. But I have no experience with trading options. I have 2 months of experience with selling options at this point. So I'd love to hear your perspective on that kind of side of it.
Yeah. Can we go back to that chart? It's useful to see that.
Sure.
So I've done this. I've been selling covered calls for many, many years. So I have to prefix this whole discussion. Like this was not new to me. When I started trading buying MicroStrategy in 2023, this was all taken lessons that I knew. I applied them forward to include covered calls in the spreads of some advanced option trading spreads. So I was familiar with how having shares called away, what that feels like before, because I've had them called away, and I know about the timeline of which they would get called away or assigned if you're short position. Had that happen to me quite a bit in March of 2020, inconveniently. But if we look at October, I was selling covered calls from July to October, and I decided in the mid-October to turn them off. So I had at the end of October, I had no covered calls on going into the election. And if we can go forward a little bit so I can see through March.
And quickly, Hermes, You didn't have those covered calls on because you expected that if Trump won, which he did, that there would be an explosion in Bitcoin related equities?
Yeah. And I figured that was, I remember sitting and watching Trump on election night in 2016, and the same thing happened. The stock market tanked, and then it shot way up within an hour of him getting reelected or elected the first time. And I was expecting something similar to that just because of his business policies and their effect on the stock market. Now, I didn't have those on, like I said, but even if I had left those on, my short calls, which I think were in the mid twos, my covered calls were in the mid 200s at that time, or low 200s, they would have all gone well into the money. And if I had left them on, I would have been able to roll them from October to November. They would have stayed in the money, and then I would have rolled them again into December, and I'll explain how. But then they would have been in the money again, probably in December, and then I would have rolled them again into January, even though they were in the money. And I would have received some credit because I could have at least left the same strike price. And so even if you keep the same strike price, which was, again, mid twos now, or moving it up $5 or $10 at a time, you would receive a credit for doing so with a heavy negative position being that far in the money. And then by January and in February, all those would have expired worthless. When a stock goes parabolic, like it did in November, it can't sustain that. It's not going to happen. Now in September, when I sold the October calls, those were not the 10 delta. They were a low delta, but they weren't the 10. So if I had done the 10 delta, I would have been able to recover that from a lot easier. But at the time, I didn't have that on.
They were the 15 delta, the 20 delta.
I think they were closer to between the 15 and the 20 at that time. So for rolling, roll, and like I recommend all the time on it, you wait until expiration. The closer you are to expiration, the more likely your shares will get called away if your short call is in the money. Right? Does that make sense?
So you were breaking up a little bit there. You said the closer you are to expiration, the more likely it is that your shares will get called away because they can get called away early.
If they can get called away early, but if they're in the money, there's a high probability they will get called away the week of expiration and maybe even a week before expiration. Mm-hmm. So what I recommend to people is to, if they are at the money or in the money, don't be afraid of that. If you sold a 10 call to begin with, because that means the stock has already gone parabolic and that's not going to last. So at that point, when the stock price meets or exceeds, it breaches the short strike, you can roll 2 Fridays prior to expiration.
So about 2 weeks you think is enough buffer. So just to recommunicate that for people. So when you roll an option, you are buying to close the option that you have open right now, and then you're selling a new option. And you know, brokerages and different platforms, Robinhood, they make it really easy when you use the roll feature, because people do this all the time. So let's say I have a MicroStrategy covered call that's in the money right now, so it's at 290, and it's going to expire, you know, next Friday. Right now, Tuesday, April 15th, the week before, it's very likely that it could get called away. So I'm going to want to roll that out, is what you're saying, right, Hermes?
Yeah, it is. The numbers work, but we haven't had a 290 strike that was a 10 delta in quite some time. So I think we're at probably close to the bottoming out right now in the short term for the stock. So if you have a 290 or a 300 right now, that might be hard to recover as we go back into a bull market here.
That makes sense. Well, yeah, I was using just a random example of a number that's lower than the current share price, right?
Right.
And the other thing that you touched on is that when you're rolling these things out, even though you're underwater on the option, you can still collect premium and potentially get to a safer spot. Like you were saying, rolling them up $5 or $10. It's almost like, you know, you're playing a video game and you're trying to just get to a safer spot and kind of hang out and then run behind, you know, another rock. And so when you're rolling it out, because you're adding time, you can collect some premium. It's probably not going to be a lot of premium, but it's some premium. It won't cost you anything, and you're putting yourself in a safer position. And I think what you were kind of alluding to is waiting out the stock's parabolic rise, because over time it'll kind of revert back to a more reasonable area, and you can put yourself in a position to have the options expire worthless.
Yes, and that's why starting with the 10 delta is really key for the strategy, so that when a parabolic move happens, you're ready for it. But if you start off selling the 20, 30, 40 delta, like what MSTY is basically predicated on, you're really going to cap your upside severely when there is a parabolic move.
That makes sense. And I want to talk about MSTY and IMST. It's the last topic that I prepared for this. Just to summarize, so selling 10 delta covered calls with a 30 to 45 day expiration date, in your mind, is a conservative strategy when you have a sizable position in a stock, for example, MicroStrategy, to be able to generate yield while still holding the asset. And if you play your cards right, you focus on that 10 delta and you roll at appropriate times, you can put yourself in a position to not only keep the stock, but continue to collect premium along the way.
That's correct.
And for people to think about this, the only risk to the person that's selling these options is that they, well, like the worst case scenario is the stock goes down, but if you want to hold the stock for a long period of time, then you don't care about that. It doesn't matter. And then the other side of the spectrum is that you end up, selling the stock. But if you're like a trader person that's used to trading things and taking profit, then that's not this horrendous reality. I mean, you were probably going to sell the thing at some point anyway. You collected premium along the way. That's the way I think about selling covered calls. It feels like a trader's dream. And I know a lot of people that focus on trading. I focus more on holding, and that's what drew me to this, because I was like, wait a minute, I can generate yield on a big position that I already have. That sounds pretty interesting. So yeah, I guess, did I kind of summarize that?
You did. You did. I have MicroStrategy. I'm not looking to trade it in the sense of some other people that are considered traders. I see myself as an investor. I show one portfolio online, but I've got multiple portfolios that I don't discuss online too. So I'm very much a pro MicroStrategy long hold investor. I just see, so like I mentioned before, I've sold covered calls for years. 10 deltas were never worth my time for any other ticker. The IVs on all these other companies were, you would hope that they would exceed 50, 1 week, just so you could sell a good covered call for a week or two. But now you've got MicroStrategy, which is perpetually over 90 or 100. And it's really incredible that people are able, if this stays, people can actually retire on this pretty easily and much sooner than they would have otherwise been able to do. But yeah.
In your mind, is MicroStrategy the single best stock to trade options on?
If I consider myself being long on a position, yes, there are stocks that have more IV and that can stay higher, like MSTU, a derivative. Their IV is much higher. I think it's almost about 2x, right? Their stock moves 2x to MicroStrategy, but it's also got 2x the IV. But I would not say that I want to hold MSTU as a long-term holder or an investor, because I don't see that as an investor. So it just depends on what your strategy is. My strategy is strategy, so I just see like the 10 deltas as being a little bit of extra icing on the cake for a position that I already want. Whereas any other high delta or high implied volatility ticker, I'm looking to make money purely on the IV itself over the short term and not make that a long-term investment.
Yep. And even other like notable, like I guess options traders favorites like Tesla, their IV is not in the, like the premiums aren't there the way they are for MicroStrategy.
No, they are definitely not. Tesla's IV right now is, well, it's pretty decent right now. It's got 86 from what I see on my chart here. And actually the same, I'm on Thinkorswim. It shows MicroStrategy is actually 85, 86 as well, which is the lowest that I've seen in a while. But Tesla, we know, like a lot of these companies, when they spike their IV, that's not sustainable for a lot of these other tickers, and they'll fall right back down to the 40 to 60 range if they're one of the heavy tech stocks, or the Tesla or the NVIDIAs and stuff like that.
Yep, makes sense. So I just want to, I want to throw it. I'm going to let everything that we've discussed kind of settle. The one options, well, I want to talk about cash secured puts right now. But then at some point I want to come back to rolling and the strategy for rolling, because I think we scratched the surface on that, but I'd like to get a little bit deeper. But so selling cash secured puts. So this is the opposite of selling a covered call, right? This is securing the put with cash. So you have to have the cash balance, not the shares, and you end up getting assigned if your option, or if the stock hits the strike price of your put, you will be assigned the shares. So it's the opposite. Instead of selling the shares on your covered call, you end up buying the shares that you get assigned. So this is technically a bullish position, but I saw you tweeting about it today because you were talking about you would just rather buy the shares. And I agree with you on that, especially for something like MicroStrategy. But do you think that there's room for a cash secured put strategy, maybe with margin, if you're looking for cash yield outside of the kind of core strategy?
Absolutely. I would be careful about margin, because different brokers have different requirements for different tickers. So if you're good on all that, then yes, absolutely. If you're bullish on a stock and you like the stock, like I like MicroStrategy, then I don't see the advantage of doing a cash secured put versus what I'm saying.
Right, because you would just rather buy the shares and then start running the covered call strategy. What's the point of the cash secured put? You're going to lose. You're not going to capture the upside. You'll generate some cash along the way, but why not capture the upside by holding the shares and selling the calls?
Yeah, no, you can structure the cash secured put in order to capture a lot of the upside, like I wrote in that post today. But you guys sell deep in the money puts. I don't have it pulled up right now, but yeah, you'd have to be selling the right to like buy. I will buy MicroStrategy at $330 a share, even though it's trading at 305. And I'll sell you the right to sell me your shares at 330. Now, on the face value, you think, why would I do that? And the answer is because you're going to get a lot of premium for that. I'm going to get a lot of premium from selling you that right because it's in the money.
Yeah. Yes, that makes sense. But it's like, why even? That's just kind of a big thing to do, right?
Right. Yeah. If you're that bullish on a stock, you may as well just go long or buy a call or just buy the stock outright.
Yeah, it's almost like a complicated approach that could be, that you can beat out by just buying spot shares.
Right. Right. And then you have to reserve more money. Then your capital outlay has to be, for in that example, $330 times 100 shares. So 33,000. And really helping yourself out.
Gotcha. So last, and Hermes, you still with us? You froze for a second. We'll see, ladies. Oh, Hermes, you there?
I'm here. Do you see me?
Yeah, you're coming back. I think it's going to catch up right now. So just let me know if you can't hear me or anything like that. Last thing on MicroStrategy options trading before we dive into just MicroStrategy as an asset is for for rolling these options. So just so that I understand, if you have a covered call option sold, things aren't going your way. To you, is 2 weeks before the only time to roll, or would you roll even earlier than that?
No, I would roll. It would depend on what the stock does. And that's what I did from the end of November, really through March. I rolled, especially in December and January. I was rolling every week, in some cases, multiple times a week as the stock came crashing down. I remember opening a call at the 900 strike and then rolling it down to the 800 with the same expiration date, rolling to the 800, 700, 600, and 500 within the same month. And I just captured a lot of premium on those calls within a month.
Awesome. So that's what I was hoping you were going to say, because instinctually I was thinking that would be the right approach. But I was wondering if I was like a noob and was too trigger happy with doing too many rolls and I needed to chill out, because it makes sense to me. If the stock is going down, well, then I'm closer to being safe, so to speak, on the covered call. And it's going to be cheaper, to buy to close and you can, then sell the new covered calls. In other words, roll. So I figured, why wouldn't I collect premium and get myself to a safer spot? And if I can do that 5 days in a row, why not do it 5 days in a row?
Yeah, you probably won't be able to do it 5 days in a row. And what I recommend is when you start off with a 10 delta and the stock collapses like it did, then your 10 delta now becomes the 5 delta or even the 3 or the 2 delta. Well, now you can roll it down to the new 10 delta. And if it's within 30 days, then extend it out, a week, maybe 2 weeks. And then you have a new 10 delta at a lower strike and you've got an extra credit.
Yep. So, okay. So the 10 delta is really the North Star. The 30 to 45 day, expiration. Why is that the best, amount of time in your mind?
There was a study done, and it's been validated by a bunch of people, that says that the optimal, and I did another post on this with a chart that basically can't do the slope here, but the slope rapidly declines with gamma increasing. Gamma is the option Greek that affects the price of the delta. And as you get closer to expiration date, 0 day, that delta, there it is, perfect. So this was I believe this was study done by Tasty Trade, which is a very well-known options education firm, and they have their own platform for trading. But the most rapid decline starts between 30 and 45 days and goes to zero. Before that, you're giving up. You're adding a lot of time for not getting that much in return in terms of dollar value. So you're looking at that 30 to 45 day, I say 30 to 40, as the most bang for your buck. And that's really what it comes down to.
Makes sense. We had a different guest on this show that also was a big proponent of Tasty Trade. So it's good to hear that you reference them also. All right. So moving on a little bit from the option strategy. That was fantastic, by the way. Thank you for all the detail there. MicroStrategy is an asset. MicroStrategy has outperformed Bitcoin for a few years now, and it trades at a multiple to the Bitcoin that it holds. Do you think, so obviously you're a big Bitcoin guy. I see you tweeting about Bitcoin, and if you're a big MicroStrategy guy, I think you kind of have to be a big Bitcoin guy. In my mind, for an individual stock to outperform Bitcoin for a long time horizon, that's going to be insanely hard. We saw NVIDIA do it for like 5 years or something like that. When NVIDIA went on that insane run, it outperformed Bitcoin. But now it doesn't outperform, MicroStrategy or Bitcoin at this point, or at least it hasn't over the past year. Do you think that MicroStrategy will continue to outperform Bitcoin, for the long term?
I think the only way to scratch a diamond is with a diamond, and the only way to beat Bitcoin is with Bitcoin, with intelligent financial leverage. If Michael Saylor and the company are able to consistently do what they have been doing, yes, they will continue to outpace it. So I don't think there's any real question about that. The numbers speak for themselves. Ever since August 11th of 2020, when they first made their first purchase, they have far outpassed the rate that Bitcoin has grown. So
do you think that MicroStrategy will be one of the top, if not the top performing equities over the next 20 or 30 years?
I think that is inevitable. I don't think there is any other option if they remain true to their current strategy. It's like saying, do I think Bitcoin is going to hit 1 million? Yeah, it has to. There's no other way around that. Unless something fundamentally changes, that's I don't think that's possible to not happen.
Yeah. And so we both think that Bitcoin's going to hit 1 million. I think that's a pretty fair place to be when it's gone from $1 to 100,000. It just has to 10x from here. If you really think long term, think into the future, I think $1 million Bitcoin's pretty believable. Saylor and MicroStrategy, they're at like something like 580,000 Bitcoins as of today. I mean, they added a bunch of new of Bitcoins with the most recent purchase, right? So I think it's pretty believable that MicroStrategy is going to hit 1 million Bitcoin owned. Also, do you agree with that?
That I don't know. I can't tell you if they're going to hit 1 million or not. I know that they are certainly going to try. At least it certainly appears that way. I think they're at 531,000 as of Monday.
531.
So they did right by being the first to half a Nakamoto. I don't think the ability to attain another half a Nakamoto is going to be as easily achieved as they did. They might very well get it. There's a lot of variables in there. It depends on what the U.S. government does and all the other governments of the world, and even the state governments, which are now adding Bitcoin to their reserve. So it's possible, but I would say it's probably less likely. It's at least within the next couple of years, not very likely. Probably not even, I would say not even probably within the next 10 years.
And that's fair. But there's some number that they're going to hit, right? So if it's a 531K Bitcoin right now, if they get to 750,000, who knows what number they get to? They're going to get to a number that's above 531K. When you start to do the math on that and you look at, okay, well, Bitcoin is going to cost at least $1 million. They have 531,000 Bitcoins. They have 650,000 Bitcoins. And then they're going to trade at a multiple of that Bitcoin. the market cap, the potential market cap numbers for this stock are completely ridiculous. And then you look at it sitting at $80 billion right now, and you wonder how does this make sense? How am I buying this thing for 80 billion when I know it's going to literally go to $1 trillion? It feels like, if you just extrapolate long enough. I don't know. Does that rattle around in your head at all? I don't even know if that's a good question.
It does. And I do listen to the guys on MSTR True North. I appreciate Jeff and Ben and the team putting together all the research that they do. They do a lot more than I do. I think they have some very ambitious, optimistic numbers, and they may be right. They may be right. I like to stay a little bit more grounded, because I'd rather, under promise, over deliver in my recommendations to people. Because I think that's, it tends to be truer anyway, than being overly optimistic, just in terms of, statistically speaking. So reaching 1 million is going to be very, very hard. I think the company could end up becoming $1 trillion company. People are predicting it would be $1 trillion company this year. I doubt it. I think they will hit that at some point, though.
Yeah, this year would be crazy. I mean, we're all going to retire if it goes to $1 trillion this year, right? That'd be something. Okay, well, appreciate that response, that very grounded response. In terms of the multiple that MicroStrategy trades at, do you think that goes up over time?
So this is the other thing. Again, a lot of people say, yes, it's going to go up. I mean, I think the highest it ever traded was 6x towards the beginning, which is insane.
Yeah.
That would be like them trading, I think, $900 a share right now, if they're at 2x. So I think they probably will go up, but this is completely new. To have a company valued based on the assets rather than its earnings, we haven't really seen this before with all the new fast speed changes and what's coming next. It's really fascinating, and we're all going to be learning together for the first time, and we're going to see exactly what the market is going to price it at. We have all different ideas. A lot of people agree that the multiple can go up to 3 to 4 to 5 real quickly, or even higher to 10x, which I think is pretty insane. And they're comparing it to the price to earnings that a lot of these other companies have. But I think between 20 and 30 on average for a lot of these tech companies, or the Mag 7. Some of them are even higher than that. I think 55. I think I saw for one of these companies. I don't know if it was Apple or Nvidia. I don't remember. But even they're saying if it's not that, but even if it's like half that or a third of that, that still puts MicroStrategy at like a 6 to 10 net asset value. And I hope they're right. I do hope they're right. I think it's not earnings, right? So there's no. It's quite a bit different, and there's so many variables and factors involved here that I can't say comfortably what it's going to be. I do think it will be more. I can promise. I can feel comfortable saying that I think it'll be more than 2. I think it'll be at least 2.5 to 3, probably within the next year. But beyond that, I really don't know. I don't even want to care to guess.
I appreciate that response. And that's something that I think is lost on a lot of people, how new this is. MicroStrategy is not an ETF. It's not a holding company. It's just a new thing. It's a Bitcoin treasury company. And now we're starting to see more Bitcoin treasury companies. MetaPlanet is a Bitcoin treasury company. It seems like GameStop is going to be a Bitcoin treasury company. I suppose that we don't know if that's going to happen. Do you have any opinions or have you paid any attention to GameStop?
Yeah, that is going to happen. Yes.
Like a full conversion to Bitcoin treasury company?
They'll still have their business, just like MicroStrategy has their business. But yes, they will be a Bitcoin treasury company that will become their primary means of evaluating their stock. Yeah.
Ryan Cohen seems like he's pretty sharp. He's like a big investor. Like he was at one point one of the largest individual shareholders of Apple, one of the largest individual shareholders of GameStop before he became the CEO of GameStop. Do you think that, I'm not comparing him to Saylor, but do you think he's pretty qualified to be in this spot?
Definitely. I definitely think he's a good fit for the position. I think he's watched Saylor very closely. He's watched a lot of these other companies. He's watched and followed Bitcoin. He's watching the government and politics, but he's got a very different personality than Michael Saylor does, and he's going to have a different approach. A lot of these other companies that are much smaller than MSTR, they are carbon copying whatever Saylor is doing. I don't think that's what Ryan's going to do. I think he's going to be a little bit more original in whatever he chooses to do. And I don't know anything beyond that. That's just my understanding of seeing his personality and understanding who he is.
Could be pretty cool.
It will be.
Wow. Do you have interest in that stock? Do you hold GameStop?
A small spread as a fun trade that I posted a few weeks ago. It's just a vertical spread. So it's like a max loss of $500 and a max gain of $8,000 if it goes over $50 a share by June. Other than that, no, I don't have any heavy stake in that. I only allocated $500 total towards GameStop.
The options premiums on GameStop aren't there yet, right?
I haven't looked too much at those. I know they've gone up. I know their IB has gone up recently, and it will continue to go up when they make an announcement, which should be pretty soon, about their Bitcoin purchases. So, and we'll see how they purchased it too. So if they're going to lever it like similar to MicroStrategy by getting debt, I think that will change the IB game, and they may have an IB that's even higher. So we'll see.
It's going to be fun. Going to be awesome. Quick touch here. IBIT covered calls. You post, the 10 Delta IBIT covered calls. But when I responded to one of those tweets, I asked if you were trading them, and you said you don't have IBIT. You just have on-chain Bitcoin and MicroStrategy. Is that just because you're not interested in IBIT because it's like, what's the point of buying IBIT? I can just hold actual Bitcoin, or is there another reason going on there?
No, I don't have a reason to buy IBIT. I can buy Bitcoin. I buy Bitcoin directly and I store it off chain, and then I buy MicroStrategy. I don't see a reason, and I wouldn't buy IBIT anyway. If I were to buy a Bitcoin ETF, I would buy BITB simply because it has the lowest expense ratio for fund management.
Bitwise.
Yeah, the Bitwise one, right? So I just don't have a need for that.
Fair. And the draw of the covered calls on IBIT is not enough.
Somebody asked me if I could put up the 10 deltas for those. That was never my recommendation, but I just threw it up there because somebody asked, and I'll probably continue to put them up there, but maybe not every day.
Fair. So like, if you had to share just a simple opinion on selling covered calls on IBIT, is it just like do MicroStrategy instead? Or
I would say do MicroStrategy the 10 delta, or I would even offer to do IBIT at the 20 delta, really, maybe 25, because they aren't going to move as much. That's just my thought on that.
Fair. So a little bit of a controversial topic over the past 4 days. It's funny which topics are all of a sudden, discussed by everybody on Twitter at the same time. Misty and IMST, the yield focused ETFs that are, using MicroStrategy as a bit of a baseline. Maybe you'd say they aren't using MicroStrategy as a baseline, but I believe it's because British Hodl put out a video that was pretty compelling, where he talked about Misty. He also tweeted that he convinced a guy that had, some outrageous amount of bit, or just millions of dollars of Bitcoin, to sell, a bunch of his Bitcoin to buy Misty. And I think a lot of Bitcoiners just found that completely preposterous. You've expressed a lot of opinions about Misty on Twitter. And if I could summarize your opinions, I think it's simply that it's way better to just do MicroStrategy covered call strategy, or just hold MicroStrategy, as opposed to Misty, because Misty's going to go to zero against MicroStrategy. So I agree with the latter, but I'd love to hear you expand on why you think Misty is not the right approach as opposed to MicroStrategy. And, I'll ask some follow-up questions based on that.
So as I've mentioned to quite a few people, even in my personal life, you have to be goal focused. Start everything off with your goal. Don't just say, what should I do, or what's the best? Because I can't answer that for you. What is your goal? Are you a person who wants to learn how to make the most bang for your buck, the most bang for your time? If you are, then I think that what I offer, what I recommend, is probably the best that I have seen. But if you're not a person, if that's not your goal, if you're okay with making less than less than the top, if you're okay with going on autopilot, then Misty may be fine for you. My whole discussion on that was simply to say, this is not the best way. And if you're okay with acknowledging that, like, look, I'm a person who just doesn't want to learn cover calls. I just want to buy this and I just have money come in every month. That's fine. That's fine. But don't tell me that you're going to, because this doesn't make sense. This is where it breaks down. If your logic is, well, I'm just going to drip. I'm going to roll the dividends back into Misty so that I just keep getting more and more shares. That doesn't make financial sense. No. The only way it makes sense for anyone to own Misty is if you're planning on using those dividends, if you're planning on withdrawing those.
Yep.
Or maybe using them to invest in something else. But if you're doing that, the whole purpose is growth. And if the purpose is growth, then just go with the better. Go with MSTR.
Yeah.
That's my whole argument on that.
Well, I appreciate that. If you are a retired person that's 75 years old and but you understand Bitcoin, you're one of these people that actually understands Bitcoin that's like 75 and has Bitcoin, but wants cash, to cover their mortgage. And
no, I would say don't do that. I would say if you want that, I would recommend STRF or STRK from MicroStrategy, right? You're going to get an 8 or 10% dividend. You're retired. You're probably on fixed income if you're not working, right? And so this is going to give you a safer bet. You're not going to have to worry about your equity going down, gravitating towards zero, because that's what these are going to do. MSTY is one of the, even though I think it's a year and change, I think it's still one of the newer ones.
Yeah, just over.
Right. And you can look at the older ones like the Tesla one and the Netflix one and some others, and you can see it's going to go lower because that's how these things are structured and designed. And I would just hope that people become aware of that and don't lose money.
Sure. If MicroStrategy rips a tremendous amount, wouldn't there be a period where like Misty would go up? Like it just wouldn't go straight to zero, right?
Right. It wouldn't. Yeah, it would go up. All of these, if you go back and look at the Tesla one, it goes up and down. And when it rips, it also goes abnormally higher. But then it'll come right back down.
Yeah. And between Strike and Strife, so I know that those are designed for institutional investors. Do you own those by any chance?
No, I don't. I recommend them to people who are not tech savvy or people who are, I just want a dividend stock. Okay, well, look at this one for a dividend stock, right? I would recommend those to like my grandparents if that was ever a discussion I had, which I don't. But I just think they're solid. I trust the company. I trust Saylor, and you got your fixed income. And
yeah,
you might get a little bit of growth out of it too. So
can you buy, but you can't buy those, I don't think, on a normal brokerage account, can you?
You can. Yeah, you can now.
Oh, I didn't even know that. Okay, cool.
Yeah.
Very interesting. And so last thing on this, IMST is the one from Bitwise. Any interest there, or like, do you see anything?
I'm interested in watching it. I mean, it just came out this month. So yep. Time will tell. I'll be curious to see, 1 month charts when we can. I don't know what day they came out, but I have to wait till May to see a full month. But it'll be fun to compare them. I think I wrote in a post that I think we're going to see people move over to IMST because I think those. I'm not a fan of yield maxes, and I think the other company, I forget what's the company, Bitwise, right? Yeah, so I think they're just a better company, and they will manage that fund better. But time will tell.
I think that's a fair assumption. Well, look, ladies and gentlemen, give Hermes a follow. It's at Hermes Lux, just the name that you see on screen right here, just all one word. Yeah, there you go, Ray. You got the banner here. At Hermes Lux on Twitter. One of the most knowledgeable when it comes to MicroStrategy, covered call strategy, and just a great voice in the MicroStrategy and Bitcoin ecosystem. Hermes, was there anything else that you wanted to discuss today, or did we kind of, did we talk about enough?
I think we're good. Unless you had any other questions from other people, I'm good. I appreciate this. This is very helpful, I think, for you, for me, for the whole community. So whatever we can do to help everybody, I think that's the whole goal. The rising tide lifts all boats, right? So
Absolutely, man. Well, thanks so much for joining. Ladies and gentlemen, make sure you give him a follow at Hermes Lux on Twitter, posting the MicroStrategy 10 Delta covered call, strategies on a regular basis. IBIT too, if you're into that, and just voicing some solid opinions. Hermes, thanks for joining, man. We'll catch you next time.
Thank you. Appreciate it. Thanks you all.